Hi all, this is Dr. J at 11, streaming live, coming to you live from Long Island, New York, where it was a beautiful but cold day. It was also beautiful on Wall Street for most of the day. It kind of changed a little bit with a half an hour before the close. It then came roaring back, the weather cleared up, and the Dow closed up. It was a nice little comeback day, although I would have liked to see a better comeback day. So as comeback days go, I would rate it about a 6 out of 10. Anyway, that's not what we're here for today. What we're here for today is lesson 2 of our class, free class on stock charting. And in lesson 1, if you recall, we discussed Japanese candlesticks, the 4 components of the Japanese candlesticks, the 4 data points being the high, the low, the close, and the open, and the component parts of it being the wick, the tail, and the body. Or if you like, you can just say the upper wick, lower wick, and the body. Or another synonym for wick is shadow. So keeping that in mind, the terminology, we're going to take a quick review before we get to the charts and I start with the new material. The review will include the homework, which I hope you did. I hope all 185 of you did the homework. I don't know if you did because only 2 or 3 of you shared it with me. I put my email address down. It's redibit, redibit, at gmail.com. And you can submit the homework that way, or you can submit it as a comment or a series of comments. As Mr. I believe his name is Klein, but did it as comments, and someone else sent me emails. So either way, and I think I can get at least an idea of how many of you are doing it, and if you're doing it right, and if you're following along correctly. Last week we did the Japanese candlestick, and we also did a 1 candle pattern called the engulfing pattern, which happens to be an area of expertise of mine, having published an article in Stocks and Commodities magazine 3 years ago on the engulfing candle, and an empirical study that a colleague and I carried out as to how to trade after an engulfing candle, and is it profitable? And I'm not going to tell you. Maybe later I'll tell you. In any event, do your own due diligence. Remember, my opinions are strictly my own. I do not get advice from anyone, and they do not constitute investment advice. Occasionally I have a good idea, or 2 or 3, but follow at your own risk. Consult with an investment advisor. Please like this video. Tell your friends about it. Tell your friends it's not too late to get in on the class, but if they wait much longer, it will be too late, because either I'm going to close it, that's right, make it private, and the only way you can get in is if you're in the first few classes, or it'll get to the point where you are too far behind, in which case it will not be of benefit to you. So you must start now. I have enough students to go 5 or 10 lessons, depending on how many I think you need, how many you want. So it depends on feedback. It depends on a pace. It depends on a lot of things. I do not prepare ahead of time, so if I make a mistake, correct me. Oh, you can't do that, even though you couldn't do it through a chat. Through a chat, but I'm probably not going to see it, because unfortunately, when we start screen sharing, I lose the ability to see your chats. So if you want to test it out, say hi to me right now, and I'll say hi back to see if the chatting function works. No, in fact, I'll say hi to you, and then you can say hi back. All right. Do you see my chat message? Hi. And you could just say hi back and it'll have your name. So I'll know a few people's names. No? Shy people. Okay, let's go to the video charts and share screen. So it's too late to chat at this point, I think. All right. Once I share my screen, I can review the homework, review what we did last week before we get into new material. Kind of like a real class. Want a little follow through from the last class. Okay, so if you recall, on the last class, we introduced a bullish candle or a bullish Japanese candlestick and a bearish one. We said that traditionally the colors are white and black, white for bullish, black for bearish, but it's more colorful to use green and red. And really you can use any two colors you like, but green is taken to be bullish and red is taken to be bearish, kind of like the idea of red ink, I suppose, or kind of like the idea of how your stock quotes are given. When you're up on the day, it's in green. When you're down on the day, it's in red. I don't know what happens when you're even on the day. Probably colorless, maybe. Anyway, I have my email here, redibit@gmail.com, if you want to submit homework. And to review, the four parts of the candlestick are the high, the very highest tip of the upper wick is the high of the day. This would be the open. Now this would be the close. This would be the open because it's green. The stock price went up from a lower point to a higher point. And the part that's colored in green is everything between the open and the close. All trading that occurred after the open, but was lower than the open, is given by this wick here, the lower wick. All trading that occurred after the open, but was higher than the close, is given by this wick here. Everything else is the body. So that's what a candlestick is. It's red if the open is higher than the close, which means we lost money from the open to the close. It doesn't mean that we lost money from the day before. It absolutely does not mean that. There are tons of examples where you could have a red candlestick that closes higher than the close of the day before. So that does not mean that. It just means on the day, if you bought at the open and sold at the close, red would mean you would have lost. If you bought at the open and sold at the close and made money, that would be colored green. Okay, let's slide down a little. Here's a typical chart using candlesticks, a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12-day chart. It begins with price action, a green candle followed by another small green candle, followed by a red engulfing candle. What did we say an engulfing candle was again? That's a review topic. An engulfing candle is when we have a change in color, red to green, green to red, and the body of the second candle engulfs the body of the first, and the wicks are high. The higher it makes a higher high and a lower low. So all of that is necessary. And I asked you to, for homework, mathematize the conditions by you writing 6 inequalities that need to be satisfied for a bearish engulfing and a bullish engulfing. I've gotten some nice explanations that are correct, but not using the mathematical notation. So I'm still waiting on that. I don't want to give the answer because I don't think it's a tough math problem. So if O1, H1, C1, L1 are the open, high, close, and low for the first candle, and O2, H2, C2, I2, L2 are the open, high, close, and low for the second candle, you ought to be able to write 6 inequalities for a bearish engulfing and for a bullish engulfing. I said also to find examples of a winning pattern for bullish engulfing and a losing pattern, and the same for bearish engulfing. So I'm not going to go through all the homework because then we'd never be able to get to new material. So I want to get into new material now. And that is other patterns. And if we happen to come across an engulfing pattern, we'll mention it. But other one candle patterns, what am I doing? I want to get into the graphs of the Dow and Johnson & Johnson. So let's minimize this. Minimize this. Okay, so now let's go to the Dow. Let's go to Johnson & Johnson. Johnson & Johnson was in the news because of allegations of asbestos in their talcum powder for baby powder. And that really got me angry. I did a whole thing on that yesterday after the close. Today, Johnson & Johnson made a modest pop, as you can see. It gained back $1 after a big $50 billion market cap loss in just 2 days. It gained back $1, 0.99%. I say, whoopee woo big deal. It'll be down again tomorrow. That's how it looks like to me, anyway. I think this trend. Well, we're not going to get into this because it's out of order. I'm going to talk about trend lines next week, so I'm getting too far ahead. Let's do some engulfings. Here's an engulfing right here on 11/27/2018. This big green candle engulfs the entire red candle to the left of it, and the bodies are engulfed. The implication here is that we get a rally beginning the next day, and we do. We do get a rally up to and above the previous high, or it actually made an all-time high. So this is an example of a winning trade. Of course, you have to know when to get out of the trade. If you stay in it too long, it's not winning anymore. So part of the homework was to characterize whether or not you thought this engulfing or any engulfing that you found was a winning or losing trade, and explain why. So it's a winning trade if you stay in 1, 2, 3, 4, 5 days, 6 days, even 7 days, 8 days, 9 days, 10 days, 11 days. But if you stay in the 12th day, it becomes a losing trade. So you have to qualify. You have to figure out exit strategy. You have to figure out entry strategy. Not just to identify a pattern. You have to know how to use it. That we'll do in a later video. So that's an engulfing pattern. Let's see if there's any other I can spot on Johnson & Johnson. Yes. I think this is an engulfing right here. The low is 125.60. Is that lower than the low of the day before? Yes, it is, by 16 cents. The high of the red candle is 127.61. That's higher by a penny. And the bodies, I think, are the bodies higher. Maybe not. Tricky. I don't know. Maybe not. Let's see. The close is 125, 126.06. The open is, come on. The open is lower. So this is not an engulfing, almost. Very close, but this is an engulfing right here. So I found a bearish engulfing. The other engulfing was a bullish engulfing, right? This one, because it was a big green candle engulfing a red one. This engulfing over here on the, let me get you the date, on the 30th of April is a bearish engulfing. It's obvious that it engulfs the candle to the left of it. And do we get a downturn afterwards? Well, for the 5 days we do. Even for 10 days, even for 20 days, even for 30 days, even for 40 days or 50 days. But if we hold it longer than that, we're going to lose money. So again, exit strategy, and entry strategy and exit strategy. Where do we enter this trade? Do we enter it at the open? If we do, the open the next day was 126.32. So if you sell it anywhere below that, you're making money. I mean, if you buy, you got to short it. So if you close your trade anywhere below that number, you're making money. Okay, so that's the engulfing pattern. I promised you other one-day patterns. Well, the prominent one that everyone knows is called a harami, or pregnant lady. I believe that's what it means in Japanese. Let's see if we can find an example of a harami. It doesn't engulf the candle of the previous day, but it's just the opposite. The candle of the previous day engulfs the body of the second candle. So and in such a way that it looks like the first candle is carrying a baby. So let's see if we find an example. Harami. As I said, I didn't do careful preparation. I'm just winging it. So bear with me a little bit. It may not be that easy to find. This is almost, but it's not. Let's go to the left. And the other thing is, just like the engulfing pattern, the harami has to come, a bullish harami has to come after a downturn, a trend, after a long downtrend, and a bullish harami has to come after a bullish harami after a downtrend, a bearish harami after an uptrend. So let's see if we can find that situation. Okay. Okay, here we have a harami, but it's, let's see, is it in a downtrend? I mean, is it in an uptrend? No, it is not. So therefore, it's not doesn't meet the qualifications. Let's see. Here we have the body engulfed in the previous day's body, and we do get a pop up. Let's see any other situations like that. This looks good right here. This looks like it works. Yes, this looks like, let me blow it up a little bit. Okay, so now I lost it. Very good. I'm so happy I blew it up. Where to go? Well, here's an engulfing again. Come on. I don't know why that thing gets in the way. This thing, let me close it. All right, so this is an engulfing candle. Is it after a long uptrend though? Yes, it does look that way. And sure enough, this bearish engulfing seems to have worked for X number of days, and then it failed to work. So again, you have a similar problem knowing when to exit. This is a Harami on 2/2/18, February the 2nd, 2018. There was a Harami. It was at the end of it was at the end of a downturn, and it's a bearish Harami. So it's really not it doesn't really qualify, even though it happened to work and we had a continuation down. It's not a continuation indicator, it's a reversal indicator. Meaning, this is an example. On 2/9, we have a perfect Harami. We have a bullish Harami. We have a long downtrend, about 12 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 candles long, a nice downtrend. Now we have the body of the green candle totally engulfed in the body of the red one. So we have a bullish Harami. And does it work? Well, we have a little uptrend afterwards, and it continues for about 10 days. And it even continues all the way up to March 14th when it starts to go the other way. So yes, I guess you could say it worked. Again, the problem is when to enter and when to take profits. We'll talk about that another time. So we have a second candle called a Harami, and I want you to identify two examples of a bullish Harami, one that works, one that doesn't. Bearish Harami, one that works, one that doesn't. And I'm going to show you one of my favorite, personal favorite patterns. And it's called the Dr. J pattern because there's no name for it. But I find it to be a very, very effective pattern. And it's a single candle pattern. And all it is one long, solid red candle. It doesn't even have to be solid. We could have small wicks that comes after an uptrend, or a solid green candle that comes after a downtrend. And I see such an example right away. This on 1/23 is a big red candle that began in the body of the previous green candle, which was like a multi-day uptrend. The uptrend goes back to, I don't know, it goes all the way back. I won't trace it past this, but it looks like for months, or at least a month. So this is a very long pattern, very long uptrend. This is a big red candle full at the bottom. So it's a very bearish candle, and it comes after a big uptrend. So what I like to do is get in somewhere in the middle of that candle, if possible, and go short. And if you had done that, you probably would have gotten in right about here and made a ton of money. So this is an example of a one candle pattern that happened to work. Of course, you don't see this that often. I just got lucky that I happened to see it now, because as I said, I did not prepare. So if I look now for the opposite situation, a big green candle coming after a downtrend, I doubt that I'm going to find it, but we're going to look. Well, what the heck? We'll spend a couple of minutes looking, and I'm really a terrible teacher because I should have prepared. I apologize. But what do you want for nothing? Am I charging? I'm not charging. All right, so Oh, I shouldn't be obnoxious like that. I should prepare. Okay, so I can't find it. I don't see it. I don't see a big, solid green candle after a downtrend. This is close. This one here on what date is that? June 18th, June 19th is a nice big green candle, full, almost full. It starts in the middle of the previous candle, but is it enough of a downtrend? 1, 2, 3, 4, 5, 6, 7 candle downtrend. I don't know. I mean, it is a downtrend from the high of, oh, I took that away, right? I don't even know what the high is now. 125 to the low of 120. So it's a five points loss. That's about 4%. I'd say that qualifies as a downtrend. So here's an example on 619 of a one candle pattern that I would like to get in halfway down, which would be right about here. So I would get in the next day or the next day after that, right about here, and look for a gain. My stop loss would probably be the bottom of the candle of the day before. So if I were trading this, the only question is, when do I take my profits? Well, if I was perfect, I'd take it on 7-1. But I mean, that's only if I were absolutely a genius, which I'm not. I'll be modest enough to say that Albert Einstein, the picture that I have on my email, was probably a little smarter than me. Okay, so now we have yet another pattern, a one candle pattern, which is a full red candle at the end of an uptrend, signaling a downtrend, signaling a reversal. Or we have a big green candle at the end of a downtrend, signaling a reversal up, bullish. So all three of these one candle patterns, the engulfing candle, the harami, and the Dr. J pattern, all three of them signal a reversal. And that's unusual to be successful with. It's harder to pick a reversal of trend than to go along with the trend. Remember the saying, the trend is your friend. The next time we're going to study patterns that you can use to continue the trend. They're called continuation patterns. So we looked at three patterns that are all reversal patterns. So I'm going to write that up as a comment after the vlog, after I say goodnight. And I expect you to, I'm going to put a new homework for lesson 2. I hope that you followed this. You can always replay it. Hope that you followed me on this. I hope I was clear enough. Let's see, I'm going to go back to the chat. And if you have a question, I can try to answer it now. Anybody have a question for me? You could type it. I don't see anybody asking a question. You can always ask the question in a comment, or you can ask the question to me in an email. So don't forget to subscribe. Don't forget to watch my market wraps every Monday, Wednesday, Friday, and sometimes Tuesday, Thursday, Saturday, Sunday. You never know when Dr. J is going to feel like vlogging. Sometimes I feel like a vlog and sometimes I don't. Does that make sense? Okay, so I hope you enjoyed lesson 2 of the free course on stock charting. Again, lesson 1 was the engulfing pattern and Japanese candlesticks. Lesson 2 was the engulfing pattern, the harami, and the Dr. J pattern. So I'll see you all next week, either Monday, Tuesday, or Wednesday, or whenever the spirit moves me to do lesson 3. I hope we get a good turnout. I don't need to everyone from lesson 1 to continue, but I do want a substantial number of the 180 people who viewed me on lesson 1 to show interest in lesson 2. And if so, we'll continue and we'll do, I don't know, at least 5 lessons, probably more. It's hard to say. This has been Dr. J, streaming live from Long Island, New York. Ciao.